cultured meat, and you can make it more nutritious and you can scale it. Every time you look at the top company charts and all the tech companies we're used to, and then this one just sitting there just printing money, to take the thing where like before it had to be sitting on top of this natural resource, and now to be able to manufacture that thing in this like weird, huge civilizational unlock. My call to people would be just like to dig into these things, because Earth AI is like maybe the most beautiful business model that we haven't even talked about yet.
Our guest today is Packy McCormick, an author, investor, and believer that we are living through a new age of optimism. During the COVID lockdowns, he started Not Boring, a newsletter exploring the most complex and ambitious startups of our times. Enjoy. Start off with the American Millennium stuff then. You recently had a piece entitled The American Millennium. What is that about? What's your thesis there?
Yeah, I mean, I think it came from a place of the debate was an embarrassment and kind of a sad thing. I think people were feeling a little bit depressed, doubting America a little bit. And the point that I was trying to make in the piece was politics are important. The government has traditionally been both a great funder and buyer of innovative technologies. But I think that we've maybe reached a point where as long as we don't mess things up, as long as we stick to the Constitution and the rule of law, as long as, property rights are upheld, the entrepreneurial class in America is pretty unbelievable in terms of their ability to drive the economy, and capitalism more generally is a pretty unbelievable force. And the point was kind of, I don't think we're going the way of the Roman Empire, because the system that we have here is bigger than, any one person that we put in the White House.
Yeah, I was listening to the discussion between Mark Andreessen and Ben Horowitz on the way into the office this morning, and they have a similar thesis where structured correctly, in the system structured correctly, the entrepreneurial class, what they call little tech, has the capacity to go build just tremendous things that have almost outsized cultural, political, social impact relative to the size of the early bet and the size of the team that starts it. And making sure that those conditions stay true is sort of what they were angling for. It sounds like that's kind of similar to what you're approaching here.
Yeah, I think we're making the same point. And on the other side, I can see where people who don't believe that, or who've looked at the past couple of decades of tech and say, what have you really done? Like, we have Facebook, and that's amazing, and it's connected a lot of people, but it's also like kind of a product now, and people waste a lot of time on Instagram right. Or even X, which has been great for free speech. Like, I waste way too much time in there. SaaS products are amazing, but they can nibble at the edges. I can understand where that's coming from. I think one of the things that's gotten me so excited is that it does feel like we're at the spot where startups are tackling these really, really, really big problems. So energy is obviously a crucially important one and foundational to everything else. We were reindustrialized, and there's people rebuilding manufacturing. Great speech from Chris Power at Hadrian. And you look across the industry, there's a company we're looking at called Kubi that's doing home building technology. And like all these things that you traditionally say, like, I don't know, can the government help us out? Should we cap rents at 5% increases a month or whatever? Like, there is actually just a technological solution. And I feel like now is a good time for those to be built. And so I really do think that, ideally the government and little tech work together to bring those things to market. And just as the DoD has been the buyer that has supported so many things that didn't make economic sense, maybe the government can play that role as well. I hope they work together, but even if not, as long as they're not, obstructing, I think we're going to be in a pretty good spot over the next 10 years, at least on like figuring out the physical stuff. There's obviously cultural and all of that, but I do think that is at least helped by a populace that feels like they have more material abundance as well.
It feels like venture capital was dramatically different 40 years ago. It was dramatically different 10 years ago from what it is like now. What's the arc that you've seen in your career from when you started to now?
Yeah, so my venture career is short. I started my career in traditional finance. I moved to working at a startup and being on the other side of the table from venture capital for for 6 years, and we were tackling, the physical problem. I worked at a company called Breather. We did on-demand kind of meeting and workspace, how to build out spaces in commercial buildings and all of that. But the companies that did really, really well were pretty much pure software companies. It is the greatest model kind of in the history of business, that you can spend a lot of money, make something once, sell it at 90% margins, rinse, wash, repeat. I think the thing that has happened, or at least the thing that I've noticed, and it feels like a lot of other people have noticed as well, is not that SaaS is dead or that SaaS isn't interesting, but the low-hanging fruit has kind of been taken in those categories. And so if you go do it now, you're just facing a ton of competition. All the money that you would have saved because you're building software, you're spending on customer acquisition and recruiting the same pool of talent and all of that. And defensibility has declined. And so I think, American Dynamism at A16Z did a really good job of kind of getting ahead of this and starting to invest into this. But obviously there have been funds investing in things with atoms for a while. But I think people are now kind of saying, like, look, you have AI, which actually helps solve potentially a bunch of problems. Hopefully we get cheaper energy, we get more automation. The margins in physical things aren't going to be 90% gross margins, but they're going to approach kind of where software has been. And the markets that you're tapping into are just so big that if you get it right, the outcomes are massive. Obviously, like the biggest US startup right now is SpaceX, and they're doing something really, really, really hard. They're building rockets and sending satellites to space and competing in like an almost bottomless telecommunications market. One of the other fastest growing ones is Anduril. Again, you don't want to, 10 years ago, you wouldn't have wanted to compete with the primes, let alone, the cultural stuff around supporting the military. You just wouldn't have wanted to compete with the defense primes. What they realized was if you combine slightly easier to make and slightly cheaper to make hardware with smarter software, you get a fleet of products that's actually, better, competitive, and more affordable at a higher margin than the primes are able to deliver on. And I think we're going to see a similar transition in a bunch of different industries where by combining software and hardware, you're going to be able to build products at lower cost with better margins and actually compete with some of these untouchable incumbents in these big categories.
Do you think we're entering a hype cycle in the hard tech, deep tech side of things, or do you think we're still pre or post hype cycle?
I think yes and no. Like certainly verbally we're in a hype cycle, and on Twitter and all of that we're in a hype cycle. At the same time, like these are the products that people have been making forever, and there's an opportunity now to make them in a better way. I think there's a distinction between deep tech and hard tech and, fully vertically integrated businesses. I think like a lot of stuff gets mashed in together where if there's any kind of science risk or engineering risk being taken and it touches the physical world, it's all kind of the same category. And I view them as very different things. I think taking science risk is amazing and like moves everything else forward, but it's a different thing than the kind of company that I'm talking about, which are these real vertically integrated companies that aren't necessarily pushing the science, but are incorporating whatever the most cutting edge science is. And so I think there's hype cycles and pockets. There's certainly more interest. That's great. I think you can absorb a lot of capital in this space. Some of it will be venture capital. Private equity needs to come in. Maybe there's, you probably need more project financing for startups to make a lot of this work. But I think if there is a hype cycle, this is going to be a really, really healthy hype cycle. And I'm, glad that some VCs will lose money on things that will hopefully kind of move us to better solutions.
Yeah, absolutely. So, Packy, how did you get into sort of writing and doing the not boring, newsletter? You said you were operating at a startup. How do you end up here? What made you say that's the career jump that makes sense?
Yeah, so it was kind of an accident. When I was at this company, Breather, we essentially leased out commercial space, designed it, put a smart lock on the door, and let people rent it out for anywhere from an hour to a day, and then ultimately to many, many months, and started competing a little bit with WeWork, but we were a little minnow compared to them. At one point, we had deeply like negative 25% gross margins, which is just like, it's a tough business anyway, and you cannot lose money on every space that you have. So me and a guy named Ben Rollert, who now runs a company called Composer, spent Christmas break one time just kind of coming up with a plan for how we save this business and turn our margins positive. The end result of that was this like multiple, I don't know how many pages now, but 20, 30 page strategy doc that he was our head of data science. He brought the numbers to it. I ran a lot of our operations in our New York market. And we said, like, look, what we need to do is essentially make these spaces flexible from an hour to many, many months. And if we do that and we mess with pricing, we can turn the margins positive. We think this will happen. We need all of you to get behind it. It requires a change in pretty much all of your jobs, but like, here, let's send this document first to the exec team and then to the whole company. And having it down in written form, and I think maybe just seeing that there's some light at the end of the tunnel in a business that looked like it was struggling, it shocked me how much people responded to just like a written strategy doc. And, I think there's debate in Silicon Valley and tech in general, whether strategy matters, doesn't. I'm on the side that it very much does. But that was like a little glimpse. I was like, writing is actually kind of cool. You can say something and then like people go like kind of understand deeply what you're trying to say and then go do it. And then we brought in eventually a professional CEO after our original CEO got ousted. And the team just wasn't particularly like intellectual in like any sense of the word. And so my brain just started rotting. I took an online writing course, started writing, quit. And then when COVID hit, I was planning on starting another kind of real estate based company. That wasn't going to happen in COVID. And so I just, asked my wife if I could, when we just found out that we were pregnant with our first kid, I was like, can I just like, please take 3 months to grow this newsletter and see what happens? And did that. And it started growing and the rest is history.
That's wild. So you actually took 3 months just full time. I'm going to focus on just writing for the newsletter.
Yeah, it was a weird spot because, our lease had expired in kind of like June of COVID. And we're like, if I'm just going to be writing, let's go live in, my in-laws' house and I'll go write in the basement and see what happens. I still, even over that 3 months, I think I grew from 1,000 subscribers to 5,000. So it wasn't anything special. I had not made a single dollar yet, but there was a trajectory. And I was kind of like, all right, well, if you get to like 10,000, you turn on subscriptions or ads, or like you can start making money and maybe we can like pay rent at some point. And so just kind of asked for another 6 months and then more, and then finally started making money on it. And it became the full-time thing.
Yeah. And you didn't have a fund or anything at that point. It was just writing, just the newsletter.
No, the fun was accidental. Like I remember at Breather when our exec team would have board meetings when I was more junior, like thinking, like waiting for the CEO to come back and be like, what did the VCs say? Like, what are we doing well? What are we, like thinking that they were they had some special knowledge when really they thought about the business for like the hour before the board meeting and came in and like pulled something out of their ass. But I like really thought it was a special class that like I had no business kind of touching. As I started writing about more tech companies, started investing in some of them, and then raised a fund at the end of 2020.
What worked when you were building the newsletter?
Yeah, it was really at one point, my brother and I remember we put together a spreadsheet of all the different things that we could try on the growth side, and like practically none of them worked. And the thing that really worked was just if I could lock myself in a room and just try to put out really good quality content. There were little things like if I wrote about a company like Stripe where the employees are passionate, they would share it and that would add some people. Or if there was a particularly good essay, people would share it. Like the biggest thing that happened was just randomly when people have big audiences would find something that I wrote, like it, and share it. And I'd see a big spike then. But really my whole goal the whole time has just been, how do you focus on putting out good quality content that people want to read and haven't, spent any money on ads or done any of that stuff, which maybe I should, maybe I'd have a bigger audience. But I just, I really like the writing work and I like how it intersects with VC now. And it really helps me kind of go deep on companies. And so my focus is on spending as much time as I can, making the writing as good as I can.
Yeah.
Did you grow up writing a lot, Packy, or?
I did not. In college, I was a econ major and philosophy minor, so I would have to write essays for that. Like there were a few times in high school where, like class clown is probably too strong a word, but where I was like just smart enough, but also like just like kind of a whatever, like kind of an enough that I'd write some pieces that were like very, very good, but also like could have pissed off the teachers and like really try to like walk that line. And so I had fun writing, but never did it in any meaningful way.
Yeah, you were saying earlier about writing it down and persuading people. It's interesting. Whenever we write stuff internally here, it's the same way. We're discussing a company, potential investment we'll make, and the dynamic is very different if we sit in a room and we all say what we like or don't like about a company and why we're going to do it, versus if I write a very long email to the same team, laying out every single section of my diligence, saying, here's what I like, here's what I don't, and here's my summary. The dynamic is completely different. And I think 9 times out of 10, the writing route is better. It's much more effective.
I think so. I mean, and it's also good to start with the writing and then get into a conversation after that. But once you're in a conversation, everybody wants to jump in, give their own opinion. You can't like really go with the flow of your whole argument. Certainly, like there are some people who are incredible speakers and incredibly persuasive in person or whatever, particular thing, skill that they have when they're talking. That's not me. Like I do a much better job when I have time to actually kind of put the whole analysis and argument together in one spot in a way that I just can't on my feet. And so I think like just having the whole argument kind of written out in one place as coherently as possible and then discussing, for me at least, feels a lot better.
Yeah. What does your process look like when you're like, how do you pick a topic and then how do you actually go about researching and drafting and getting to the final product?
I wish after 4 years of doing this, I had a good answer for that. I'm trying now to do more deep dives on companies. Now that I've kind of honed in on this type of company that I'm really interested in, I think there's no better way to kind of shortcut your understanding than getting to talk to the people at the company. I wrote about Base Power Company, which I think we discussed at dinner, and got to see the team's memos and their thought process as they were working through all the way from like, what is a big enough problem for us to solve to we know it's energy, what within energy. Getting to walk through that whole process and see their thought process felt like the biggest hack and shortcut of all time. And so more and more I'm trying to find companies that I find really compelling with smart people at the helm, who I can talk to a bunch of people who've invested in them or competitors in the space, or, start there and then dive in whenever I have questions. AI has been really useful. I really like Claude 3.5 Sonnet for at least like being able to ask particular questions when I don't understand something, but really trying to consume as much information as I can and then just start writing until I realize that I've like hit a dead end somewhere. And then I go research more and come back and keep writing and keep going.
Was there a particular point where you grew, your newsletter grew to the point where if you reached out to a founder, hey, I want to write about you, they would say, yeah, of course, versus them reaching out and saying, hey, Packy, would you do a write up on my company?
Yeah. I can't think of a particular point, like a particular size of audience or anything like that. I do remember, in the beginning, I reached out to Joshua Browder, who's great at Do Not Pay, but I had like no subscribers. And so he was like, yeah, we'll get to it at some point, and then ignored me. And like, there were plenty of those. Then there was a point where if I reached out to a company, they'd certainly be down to talk. And now it's a lot more, inbound, but also I don't want it to just be dictated by inbound. I want to find the most interesting companies that I can write about and reach out to them. But right now it's a combination of me actively reaching out, founders reaching out directly, or founders reaching out through investors is probably the most common way.
Mm-hmm. That makes sense. And now at some point during the newsletter, I think I started following you or knew about you at the tail end of this, but because actually Josh told me about you. You were focused on crypto, right? Earlier on, and then is crypto still part of the topics that you write about or think about, or are you more focused
in the middle of a crypto piece now?
Okay.
That was a really interesting one because I didn't start out writing about crypto when I started writing in 2020, and I remember writing the first piece about it where I like almost apologized to my audience for writing about crypto because it had this like kind of bad connotation, but I got really obsessed with what happens to the business model when you just take out an intermediary. And like, I didn't like the language around it where it's like, oh, down with the middleman and the platform, like whatever. It's really just like, if there's fewer mouths to feed, you can build a better business for kind of both sides of the transaction. Wrote a lot about it, was like, all right, I'll do it once a month and then I'll do it twice a month. And it just became this kind of nerd night for me where there was just enough interesting stuff happening that I wanted to explore it and write about it. The bear market hit. I wrote a few more pieces during that, and I've written kind of like maybe one every month or 2 months. And now it's starting to finally get interesting enough where crypto is kind of like in the background of some really interesting things happening where I feel like, from a just analysis and academic perspective, almost it's fun to write about again, where, in the bear market where people were just talking about price or whatever else like that is not at all interesting to me. But the company I'm writing about now is a company called Blackbird that is a restaurant app in mainly in New York, but a few markets now, founded by the guy who founded Eater and Resi. And there's just a bunch of interesting things that they're doing by having crypto in the background that they couldn't do otherwise. That's better for the restaurant, better for customers. I think what's happening in stable coins is just really interesting. Like at some point, if you can take 2% out of your transaction fee, that's a really interesting thing for kind of any business involved. And so there will be some kind of crypto forward things that I think take off, but there's going to be an awful lot of things kind of just running on crypto rails that I think are just kind of slowly make their way into the mainstream. I think I wrote a piece kind of justifying why I like both these like vertically integrated techno-industrial companies and crypto. And it is kind of the thing that I talked about before, where you need a dramatically better solution, or else if you're just kind of doing an iterative SaaS product with a little bit better software, you're not going to be able to knock off the leaders. But if you have on the deep tech side, something that can go after the incumbents with better margins, on the crypto side, something that actually makes the transactions more efficient and cheaper, you can actually build big businesses. Like what I care about is people building big businesses that make things better for people. And I think crypto is still really an avenue where people can do that, despite all of the noise and like the fact that 90% of the space is terrible.
What do you think? What are possibilities of what it looks like 5 years from now? Like the market has gone through a lot of product market fit fatigue of a lot of things that were ideas that just never really caught on. And like everyone's still excited about the underlying concept, but there's a lot of fatigue in terms of applications.
I think, 5 years is a very, very, very long time in this space. And I am not, I'm not good at predicting the future on this stuff at all. But I wrote about a company yesterday that we'd invested in called On Cyber. They were an NFT gallery. They transitioned over the past 6 months to taking the game engine that they use to build these beautiful 3D galleries and kind of opening it up and making a creation platform on top of it. And so the first things that they're doing are just, anybody can create games, but you can also create 3D websites with payments baked in. And there's just like a bunch of interesting stuff that you can do on top of the crypto infrastructure that they've built. I think that's going to be kind of interesting when it's just like kind of the baked in payment rails. DeFi stuff will be interesting. More things are coming on chain. I just saw somebody announce a fundraise for a company that's doing a liquid marketplace for air rights on top of buildings. This big fragmented market that is super valuable to a lot of people, but was certainly a kind of one-off transaction type of thing. I think it's just going to be an increasingly big part of the financial stack, whether that's how payments work on the internet or whether that's how you provide liquidity to different markets. I do think over time, crypto just makes capitalism more efficient. I don't know if there's going to be another wave of just like purely buying crypto products like meme coins or NFTs or something like that is really going to do it. I think it's just more like, oh, this makes this a little bit more efficient, or we can give people ownership over this thing that they didn't have ownership over before as part of a kind of better app experience that is part crypto and part non-crypto.
Yeah, I feel like kind of similar to how AI will displace sort of bureaucratic of various industries. You could have crypto do the same for the bureaucratic payments layer in some cases of the. I was just looking into Teleport, the new ride-sharing app. I think they're only doing it in LA right now, but they're going to expand to Austin and then other places. Use their own Solana, and I think it's Solana, and
yep.
It's pretty cool. Like for the user, it's sort of the same as Uber. You open the app, it looks the exact same as kind of Lyft or more Lyft color scheme, but it's the same. You hail an app, you hail a car, it takes you to your destination, you're done. But the underlying infrastructure, the payment side, completely different, which improves, like you were saying, removes a ton of percentages here, there, and inefficiencies in the payment stack that everybody, especially the drivers, end up making significantly more money than driving through, driving for.
Yeah, I agreed. And on another extreme, I had a guy who had worked in securitization at one of the big banks and then moved into crypto, write a piece kind of during the bear market on just the process of securitization. And it had this chart in there that's like 14 different steps in the process with different people taking a little piece in all of those steps, and that you can replace that with like a little bit of crypto. And there's gravity to these things and physics to these things, like whether or not regulation gets worked out in the short term, whether or not there's like a distaste for crypto generally in the short term, you're going to move to the solution as long as it's parity on everything else that cuts out 14 steps and all the attendant costs. And so I think like that's kind of, it's not sexy. And I'm sure, we'll see a sexy thing in this next cycle that people get excited about and gets overhyped and whatever else. But I think like the long-term arc is just, the less sexy, we're cutting out a bunch of steps that don't need to be there and saving both sides of the transaction kind of money and time and effort in the process.
Yeah, that makes sense. And so, Packy, you're doing all of this, you're writing, you're investing from New York. Is there a particular reason you're in New York versus San Francisco or Austin? Is there a strategic reason for you being there?
It's not strategic, other than I grew up outside Philadelphia. My family's there. My wife grew up in New Jersey. Her family's there. We have 2 kids, and kind of having the proximity to our parents is hugely, hugely helpful. We were traveling last week, and my kids stayed with our in-laws, and they both hung out together watching our kids. And so like that proximity, I think, makes all the difference. Doing all of that with the 2 kids is enough on its own without that built-in help. I also I'm an East Coast person. I love New York. San Francisco is great to visit, but it's not my favorite place in the world. And I love it out here.
We're gonna clip that little run there.
Clip the New York.
Love
plug.
you, San Francisco.
That's
Actually,
good.
I will say I've never liked San Francisco, and you can clip that part too. But and one of the reasons is like 6 of my best friends in New York all moved there at the same time together. So then like every time I went afterwards was with an eye to being like, all right, like this sucks. You guys should move back.
Yes.
But the last time I went, it was awesome. Like, I think the culture now of people building kind of like harder tech things in garages. We need more garages in New York, and they have those in San Francisco. So I do really like I do really like what I'm seeing out of San Francisco recently. I felt like the energy was great the last time I was there.
Yes, that's true. The last time I was there, I had breakfast with the founder, and then right after that, he's like, "Hey, you want to come to our office? It's a couple blocks away." We walked down the street, and it was a garage. You just like, open the door, you go in, and there's like carbon fiber parts everywhere, 3D printing, machines all over the place, like lots of other things. It was the opposite of sort of like the clean cut, rounded edges, colored offices of like the Googleplex or whatever. This was just very hardcore in the right way.
Yes, exactly. So the more of that, and I want to see. I mean, that is a downside to New York, I think, is we have less of that, and I'd love to see more happening here. Maybe it's that real estate is so expensive. I live near Gowanus, which 5 years ago would have been perfect, and now it's been like completely like everywhere is becoming a bit of a high rise. But there are still neighborhoods here. I'd love to see more of a garage culture in New York City.
Yeah.
How much of a hub maximalist are you in terms of being in New York or San Francisco or Miami? Like, is that going to hold true that it's so important to be in those places, or you think it's going to get dissipated out to more decentralized locations?
It's already gotten more. I think it's gotten less important than it was before. Obviously, what's happening in the Gundo is great, and having access to talent and facilities and all of that is really, really important. But I think even, if you wanted to start a tech company a decade ago, you kind of had to be in San Francisco. And I don't think that's the case anymore. And so hopefully it goes less and less that way. But I think there is something very magical about having those physical hubs. I just hope we have 12 of them in the country as opposed to really the one place that you have to be.
Yeah, that makes good sense.
Packy, as you've been writing and thinking about companies for a long time now, are there any gaps that no one's attacking right now that you think, like, man, why is no 20-year-old founder jumping into this? Anything comes to mind?
I think this is why I'm not a founder. Like, I really, really am like of the belief that I'm going to wait until people come. I think this was probably an easier exercise to do 25 years ago.
Sure.
Where now everything has been tried, like every possible permutation of going after different industries in different ways. A lot of things have been tried, and often they don't work for very, very specific reasons. And so, I mentioned that housing construction company Kubi before. There were a lot of people who tried to do prefab construction, who tried to do a bunch of different things in that space. Nobody's been like, oh, it's been completely untouched? Housing. It's just that it's like really, really hard to do, and you kind of have to have a pretty specific viewpoint in order to solve some of these really big problems. And so it's more that I'm waiting to find the company where I can be like, oh, actually, this all logically makes sense to me, that the business would work like this, and that this is better than the thing that has been tried before for X, Y, or Z reasons. So I'm definitely a lot more passive and waiting to see what the smartest, the collective intelligence of all the smartest people in the world kind of bring to us, as opposed to going out and saying like, I can't believe you guys have not thought to remake the healthcare system.
Yeah, I think it's interesting though, especially in the even in the hard tech side of things, how many of these guys are building, and big fan of all of them, but they're building technologies that were tried in many cases, that existed for a very long time and they were abandoned in the 70s, or even technologies like I think of Augustus comes to mind. Cloud seeding, he sort of like brought it back on the map as this cool, sexy, cool, awesome thing. And I'm an investor. I like it a lot. But like, there are a lot of cloud seeding guys around Dallas. These are guys who own a single prop airplane, 60, 70-year-old pilots out in a ranch outside of Dallas, who get on their plane and they like throw the nuclear agent, like with their hands in many cases, over a little patch of land. Like this is an existing category, as it were. It's just nobody, the technology now and the team and the capital exists in a way, it seems like they could actually take something that's been around and sort of floundering for a bit and hyperscale it into just better technology, better economics, better delivery systems, all that stuff. Is that do you think that's true? Like
100%. I was talking to Doug at Radiant. He was on the energy panel that we did out in Detroit at Industrialize. And he was talking about Rodriguez wells, which are in the Arctic. You like essentially just melt a hole in the ice to put a pipe in it. And then it just is so cold that it kind of freezes back around it and forms a well, talking about potentially, being able to do that on Mars one day, but being like, look, this idea is from the 1950s, 1960s. I think that 1950s, 1960s era produced probably like 80% of the ideas that people are working on now. I think one of the interesting why now is that you see in a lot of categories, from certainly with Hadrian to some stuff in nuclear, where the people who were operating when these industries were booming in the 50s, 60s, 70s are now getting old and retiring, and the generation behind them isn't coming up and replacing them. So even there's all the technological reasons that now make sense, but there's also we actually just need to do this stuff now. Like, these machine shops are going to close, and we need a Hadrian to make the whole thing more efficient, to maybe centralize it a little bit, and to make it sexy to go back into manufacturing, because all the people with the know-how and who just feel it in their bones, that stuff's gone. So actually we now need software systems to help people become good at manufacturing and kind of retrain that workforce. And so I do think certainly a lot of truth to that idea, that a lot of the big ideas were kind of created in the 50s, 60s, 70s. And now we need to encode their knowledge in software before we lose that generation of people who actually figured out how to do that stuff in the first place.
Yeah. And so as you've been such a not boring daily dose of optimism, you're sort of the whole sort of theme of a lot of your work is looking at the positive outcomes ahead of us. I think what's interesting about on the tech side, even culture in general, but is that we're sort of coming off a deep sense of stagnation, since those ideas in the 50s and 60s were kind of peaking, and we had we put a man on the moon, rocket ships, and it was just the American Dynamism 0.1 at that time, and so where would you locate the source of stagnation? How have we gone to the point where we're sort of stopped innovating, stopped getting excited about tech, stopped getting excited about the entrepreneurial class? Now we're getting out of that, thankfully, now it seems. But how did we get to that point in the first place?
Yeah, I mean, I think there is there's one of my favorite websites is WTF happened in 1971, where it's just like there's 75 different reasons that we started stagnating in 1971. The gold standard, I mean, or 73, like that, right around that range.
Sure.
Gold standard, oil crisis, nuclear died then, partially because of the environmental movement, but partially because a lot of utilities got crushed by over-ordering nuclear, and then electricity demand completely fell off a cliff. And so like a lot of things happened in 1971. My like very optimistic kind of take on what has happened is all of human history, essentially up until that point, was hardware innovation. Then we had about 50 years of pure kind of, mainly software innovation supported by advances in chips and hardware and other things. And Tesla happened in that period, whatever. Like there were some physical things, but really primarily driven by software. And now we're finally at a spot where those two things are coming together. And that's exciting. Is that like, I think it's easier to get excited about sending rockets to the moon than any piece of software, really. And we're finally now at a point where I think like you marry those two things together and it creates a whole lot of opportunities in the physical world that people can get really excited. Doing cloud seeding at scale is just a really exciting thing. And it's more exciting than, being able to manage your contacts with Salesforce in a slightly more efficient way than you could have before. And you needed Salesforce. Like I'm really not like an anti-software person at all. I think none of this would be happening right now without the innovation in software of the past kind of 50 years. And so I think the things happen for a reason. And it just feels like maybe it's less exciting over the past 50 years that we've been innovating in the world of bits versus kind of previously innovating in the world of atoms, but that has been a very necessary period. All the that we've put on the internet for the past however long, 20, 30 years, is now training the AI models that, that can help all this stuff going forward. And so all of it's useful, but it's just a hell of a lot sexier to see a rocket land on the moon again, hopefully with the Artemis program, or to see the Starship launch. I like really desperately want to take my kids to go see Starship in person while it's still like this kind of new experience, and before it becomes this thing that just happens kind of every day. But it's just really fun now, and I think people can sink their teeth into seeing these big physical things happen.
Yeah, absolutely.
What do you say to people playing devil's advocate, or I think people in these big, like durable, long-term businesses that have existed forever, where they say, you have no idea how big these are. It's huge, entrenched players, hundreds of billions of dollars. You guys, it was cool that you moved fast and broke things in software, but like you don't realize how big this game is. You don't realize how deep the players are entrenched. And, this is outside of your league. This is a bigger game.
I'd say Anduril, right? Like I think that SpaceX gets a lot of credit for being the company that has kind of sparked this whole kind of hard tech revolution. I think from a business perspective, and it's early, right? Like they are now winning like their first real contracts and all of that. But we can go do a thing that seemed impossibly hard to do, not just from the tech and the number of dollars that needed to be put into its side, but in terms of the entrenched interests and the lobbying efforts and the relationships with the DoD. And then to have an outsider kind of come in and say, like, actually, you can just build a better solution that kind of fits where the world is going if you combine software and hardware. And to see that starting to work, I think is an underratedly big deal, despite how hyped Anduril is. And so that would be kind of like the main proof point. But I think part of it also just comes down to looking at the economics, and mostly that like exists in some sort of techno-economic analysis now. They haven't gotten up to scale. But if what people think they can do on the cost side using technology is true, customers want the highest quality, cheapest thing that they can get generally. And if tech companies can deliver on that, then certainly like you're not going to go replace the chemicals giants overnight. But by using biology and chemicals like Solugen is, like maybe you actually can produce something that is the same quality, cheaper, more efficiently, all of that. And then over time, you can eat away at those industries. So it's not an overnight thing by any stretch of the imagination. They're impossibly big markets. So the most successful company in these categories in the next decade is going to steal 5-10% market share, maybe, in these large categories. So the incumbents are not dying anytime soon. But I do think if you can deliver quality at high margins and low price, you're in a pretty good spot. And certainly a lot of companies now seem to think that the numbers suggest that they can do that.
Right. Yeah. Anywhere where you can there's opportunity to provide a better service for the end customer. There's opportunity to drive a wedge in.
Totally. I mean, like one that I think is really interesting from this perspective is cultured meat, which is banned and people feel weird about. And the problem with it so far has been that it's just really, I mean, like, other than just being weird for people, it's too expensive. Like it's just way more expensive than meat. And so you can't expect the market to just want to be good people and pay for this more expensive thing. We have spoken to, and we'll probably write about at some point, a company called Prolific Machines. They got written about in The Information and a few other things recently, so not revealing any of their secret sauce here. But instead of the kind of growth factors and cell cultures that you traditionally use, they're using light. They're like essentially shining light at cells to grow the cells, and you can make the process potentially cheaper than factory farmed meat, and you can make it more nutritious, and you can scale it, and you can do it has all of these benefits, but ultimately it's a better quality product at higher margins, which means you can reinvest more and at a lower cost than meat. And so over time, does that replace factory farmed meat? Like, maybe. I think there's a lot of things that I wrote a piece on energy last year when there was that article, I think it was The Atlantic, that was like the morality of having kids in a burning, drowning world. And it just like pissed me off to no end, because like, this is I'm so jealous of my kids. I think they're going to be able to see the coolest stuff ever. And one of the kind of things that I came to in that piece was like that humans end up being kind of as moral as they can afford to be. And so like, there's a lot of things that we did in the past because you kind of had to do that. Now you look back and you're like, why in the world would we have, done any number of these things that seem just abhorrent to us now? And maybe eating meat is like, I eat meat all the time. I just had a salad with chicken in it. But like, maybe in 50 years, when energy is super cheap, when you have the technology to just grow meat as opposed to killing animals, you look back and say like, man, that's weird that you just like, so you just had farms where you just like had a bunch of animals that were waiting to die and then you just ate them. Like we will have the technology for that to look barbaric. And so like, I think that is one of the beautiful things about technological progress, is that as society becomes richer, you can become more moral as well.
Yeah, it's interesting. Packy, so what do you think of, we were all at Reindustrialize a couple of weeks ago. I thought it was a great event. I'm curious about your after action reports. What do you think went great? What did you enjoy seeing? Any opportunities you were expecting to see that you didn't?
I mean, overall, I thought it was great. I really I don't like conferences very much. I think they're often a waste of time. Yes. I think a lot of people are on that same page. And that one, like the whole time, I just would turn around and see someone that I had wanted to talk to, or that I've spoken to on Zoom before, but hadn't met in person, or got to see demos of certain things. And just being in a room, I think, particularly with people who are building physical things, just being kind of in a physical place together was great. I don't know how I'd tell them to change it next time. I think they pulled that together in 3 months, got that incredible group there. I thought the speakers were great. I know that I think, Congress was in session, so they didn't get as many policy people in the room as they would have wanted. And I think that would have been a really interesting conversation to have, because it's hard, I think, to be in that room with the people, both in large companies and small, really earnestly wanting to build things that are better for America as a whole and the world as a whole, and to not want to, engage with them on the policy front. So hopefully the next time there can be more policymakers there. But in terms of the kind of types of companies that we saw, I thought it was great.
Yeah, I think the general vibe was it fit the goal of the conference. Like to your point, I hate conferences too. Showing up in a beige like hotel conference room, there's nothing more like soul deadening. It's like stepping into LinkedIn. Like that's how it feels like.
Yeah, and it helped that it was the first iteration of the conference. Like in my experience, those are the valuable ones where something's happening and it's the first time everyone's getting together. Versus like the fifth, 17th annual X conference, and the company's like, we're sending you to Chicago, and you show up and you put up your booth, and it's just terrible.
That's
but this was not that. So that conference was very, obviously very pro-America, manufacturing, kind of American Millennium focused. Have you looked at any companies outside the U.S. or supplying more like rising nations? Is there anything there that you think is exciting, or you think it's all like the money and the capital and the energy is really in the U.S.?
I don't know. I mean, there's clearly interesting stuff happen. I think, the distinction I made before between kind of the taking science risk and then just taking integration risk, and I like the integration risk more. I think there's a lot of really interesting stuff happening on the science side throughout the world. I think in terms of building these really big companies that can serve, massive markets, most of what I've seen has been in the U.S., but also I just spend a lot more time looking at things in the U.S. I don't want to take kind of foreign market risk. If they're building anywhere in the world to come serve here, very open to it. But most of the exciting things I've seen have been here, which is mostly probably because this is where I've been looking.
As you look at these companies, Packy, whether to write about or invest, or just interacting with companies and businesses all the time, there's the sort of traditional markers of a good business that an HBS grad could spout out and give you the hits. Are there any? Do you have some kind of framework or heuristic, like the Packy heuristic, that doesn't fit the HBS? And you don't have to spill the secret sauce if you don't want to, but like any different unique angles. So you're like, when I see a business that does X or has Y, I'm like, that's an interesting business.
Yeah. I think like the fun part about right now is that there aren't necessarily the kind of metrics or heuristics that I'm like, you see that and you're like, oh, cool, well, this makes sense, because then anybody can see those same metrics and then it makes sense. I think there is, that ineffable kind of founder thing. The thing that I really love is something that people think might be too capital intensive or too impossible to make work, that actually the founder has like really, really, really thought through everything about how you're going to take the business from where it is right now to a big profitable business, in terms of how you get government grants and funding, the different milestones you need to hit for private equity to get interested in actually just financing your projects, going through all of that and then having a clear plan to get to the technical milestones necessary to do that, and having a compelling argument around what the margin profile look like at that point. I think all of that is really interesting to me. Like, these things that seem impossible and too expensive, I think just aren't as impossible, or at least elusive, as they would have been in the past. And founders have gotten just very smart about the ways to finance their businesses. One that I think we might have talked about before, but that I just absolutely love, is a company called Fuse Energy that I wrote about a month ago. And the kind of stated end goal is that they're building fusion, and fusion is always 10 years away, may always be 10 years away. It's a joke about the industry that whenever we get excited about it, it's actually way further than you think. ITER, the big international project, just got pushed back 9 years, the point at which they're going to start potentially producing fusion. I would be shocked if it actually happened in 2034. But they have a plan to sell kind of radiation effects testing on the way up, and to start selling these pulse power generators to competitors, potentially to the government, to do radiation effects testing, to bring down the price of the pulse power generators, which, if you can bring down the price of those and increase the performance enough, then maybe you can actually produce fusion. But if not, you build a multi-billion-dollar business in the interim that funds your path to fusion. And it's like almost the exact same path that you would take if you were just going for it directly with the approach that they're taking. Like, that is beautiful to me, when you can build a really, really big business that funds this like crazy call option that would be amazing for the business, amazing for the world if it happens. Like, if I could find 50 of those, I'll be very happy.
Yeah, that's a great model. I mean, I guess I read your piece on base power, and they're different, but similar about where if somebody tells you the 30-second elevator pitch, you'd be like, this is insane. But laying it all out, how it works, how all the pieces integrate, and how this fuels that, and now the economics of this, like, revert back or invest into this, makes you realize, the scale of the play actually makes sense from the get-go.
100%. And they're a great example of one where it's like, all right, we need to, like, the thing that they need to do, as crazy as it seems to build to manufacture battery packs and connect to the grid and trade power and like do all these hard physical things. Like the hardest thing they probably have to prove is that they can actually just sign up customers to put these batteries in their houses. And if they prove that and do that, over and over and over again, and then can show that they are profitable on the energy trading, they're a great example of one that can just go unlock financing that's not venture. And so they won't need probably billions and billions and billions of dollars of venture financing. They can get to project financing pretty quickly. And then as an equity holder, you're in a pretty good spot. And I'm not even an investor. I'm not saying this as an investor. I just think like that is this like beautiful thing where you have to examine each one of these companies almost one off, and you can't really just kind of like throw it into a spreadsheet and say like this will work or this won't work. But if you can figure out what that thing is that they have to prove, and then like kind of what kind of financing and scale they can unlock if they get there, you can find, I think, some pretty big opportunities.
Yeah, it's such a different paradigm than like the note-taking app of the month, or like, but which felt like it was true. That was what venture and tech was in like 2016, 2017. Like better note-taking. And,
it's weird, right? Like, I mean, LPs, I still think like that paradigm more. Like, I'm also just a terrible fundraiser, but like, I think LPs like that paradigm more because it's something that like makes sense, and I can go to them and say like, yep, here's my 12-point checklist that I look at for every company, and like here's my database of similar companies. And like I think there's just a lot of venture theater that's been built up around investing in like kind of the same crop of mediocre competitive companies. Whereas like this is like, actually I don't really have a process. Like I do a ton of research. Like here's my 15,000 word piece on this company, and like you just kind of have to figure it out each time. And if somebody tells you otherwise, like I think they're probably lying to you. So it's definitely a different game. I'm sure we will be in a really good spot. It'll be sad and it won't be as fun, but if it gets to a spot where these businesses are as playbooked as SaaS has gotten, that probably means we built some like very big, cool stuff and the world is a better place. It'll be a sad day, but right now it doesn't seem like we're in that spot.
Yeah, it means we'll be recording the second version of this episode in Mars. Just chilling in our villas.
That's where the SaaS model is maybe a little too good, where you're like, it's something for nothing. And like people love the idea of like, can code something, launch it on the App Store, and it's just going to rip. Like I'm going to launch, versus I'm going to go like mining and there's going to be bears and it's going to be like gritty. Like it's going to be really, really hard. And that's just more the reality of the world.
And I know my call to people would be just like to dig into these things, because Earth AI is like maybe the most beautiful business model that we haven't even talked about yet, where it's like you actually are able to sell off your stake in one or two of these mines after proving out the reserves. Like the business just becomes this like unbelievable cash flywheel. And there's a hard part in the beginning, and you have to make that first sale, and you have to prove that the whole kind of pipeline works. But after that, like I dare you to find me a software company that can spit off that much money. And so like, I just think these are such fascinating and really good businesses.
And probably for 50, 100 years too, not just like up and down in a decade.
Totally. And Cobalt, which is another kind of mining company in the space, is starting to actually prove out their copper reserves at their spot in, I believe it's Zambia. And it's literally like, yep, here's our $3 billion, like assuming we don't find any more, and we think we will, but assuming it's just these kind of 300,000 tons, that here's our $3.6 billion annual opportunity locked in for as long as we're able to mine this thing. And also we have 60 other projects going on around the world, and like maybe one or two of them hit it's impossible to find as defensible and cash generative businesses that if it works.
It's just so, I think, I don't know. Maybe it's just how I was raised, temperamental and such. It's just much more exciting than building a consumer app, as much as some of those are fun or whatever. But like, if you like, guys only want one thing, and it's like adventure. you want to be like mining and like doing stuff in the real world. So speaking of guys, we've talked about the ideas and the capital. What are you seeing on the talent side? Is there an increase in appetite for these kinds of ventures from a talent perspective? More guys, more technologists sort of moving this direction, or are they still sort of stuck in the SaaS world?
No, I think there's a few different pathways. Like one, first of all, before, if people would reach out to me about connecting them with a portfolio company, most of the time it was a software business. Now, most of the time it's a hardware business. And part of that's, I'm sure, just because I'm writing about that stuff more, but certainly even just for kind of young people who are asking for advice or asking how to get into certain companies, I'm seeing a lot of that on the hardware side, which I think is very cool. I think there's also a really interesting phenomenon where second-time founders will make a lot of money in SaaS or in consumer or in wherever, and then go apply it to a big, hard physical problem. And there was that great piece, and I'm blanking on the name, that Trey Stevens and Marky Wagner wrote, which was it, Choose Good Quest,
yes,
where they talk about that thing where you need to build up. And again, this is why I think having software and hardware both humming in the world is great. It's a really great training ground to learn how to run a company, get your resources, and then go after something that seems impossibly hard to do. And so I think that pipeline is very strong right now, where, if I talk to an exited founder who's kind of thinking about what they want to do next, oftentimes it's taking, the fact that they don't have to worry about money for the rest of their lives and have enough money to start kind of self-funding something and going to apply it to one of these really big, hard problems. I think there's probably a dearth of maybe that middle layer that still needs to be built out. We don't train as many nuclear engineers as we used to train, right. Or, there's not as many chemical engineers as there need to be. And they all, they all work and operate near you guys. And if, people want to build big, enduring energy companies, they're going to need to get a lot more kind of chemical engineers on their side. And so I think that level probably just needs to be rebuilt a little bit, and tech needs to do a better job of capturing that talent. But I think in terms of junior talent and then kind of senior people who are going to start their next thing, that pipeline seems very strong.
That's where I see it. It seems like the utility of the Twitter hype, quote unquote, around some of these companies and industries to be very useful. Is where whereas again, you tech Twitter 10 years ago was purely SaaS, and you were looking at Stripe and Square and Intercom launching at the time, and everybody wanted to do that, but for X other thing. Now, when they log on Twitter and they see dudes with mullets, throwing drones from whatever at the roof of a building, that's a very different vibe, and seems to be at least sparking the imagination of technologists to say, maybe I could do that instead of just write a CRM or whatever.
Totally. CRMs are such a good one to pick on, because I do think there's a lot of valuable software, and CRMs are maybe AI makes CRMs opens that market back up. The CRMs are a fun one to pick on. On your point about the hype cycle, there are very few hype cycles that I think are not ultimately productive. I think, the crypto hype cycle, way too hypey, but now there is plenty of infrastructure in place to go out and actually do the things that people have wanted crypto to do for a while in place. AI has gone through 4 different winters. The internet bubble, I think Amazon alone probably multiplied all the money invested in kind of tech before the bubble popped. But then also you lay down the fiber, and you can. So it's hard to think of one where ultimately, if the end goal and the big vision for the thing was sufficiently big and valuable, it'll ultimately get back there, even if in the short term there's a bubble, and those bubbles are really good at attracting kind of capital and talent. I guess the trick is don't burn everybody out on the industry such that they never want to touch it ever again. Right. But otherwise, I do think that bubbles are productive.
Yeah. It's funny, the tulip bubble is the only one I can think of that probably wasn't ultimately productive. And it was
That's a very good point.
It was such a savage bubble that it's still burned into the psyche of the West, hundreds of years later.
Beanie Babies.
Yeah, that's true.
Yeah, Beanie Babies.
But do you think that fits still? Where the vision for tulips, it was just a mania. There was no, tulips will do this in the future. It's I just want the most valuable tulip, and the tulips are going for more than the price of an Amsterdam townhome. But I just need to show off to my neighbors that I have the most expensive tulip. Whereas most of these other bubbles, there is a world in the future where if you work out some of the bugs, you can actually it becomes this very valuable thing. And I think as long as that North Star and real potential for future value exists, you can survive a bunch of different bubbles, and people will keep getting attracted to it.
Yeah, the California Gold Rush is a good example of that, where you do have overhyped hype, let's say, relative to the structure, the opportunity, et cetera. But what it leads to, is a bunch of people did find gold, and there were a lot of wealth was created. But the long-term sort of positive effects of that was the state was settled, like the state was conquered, because that attracted a lot of very high capacity guys, families, etc. A lot of them lost money, whatever, got eaten by bears. But then the state was settled. Like you get civilization into this rugged region that was literally as far away as possible from the civilized East Coast of the time in the early 1800s. And post hype, you at least have civilization in this area that others can come and build on top of.
It's a great. You read about the settlement of the West generally, or of the Midwest, and it's like just a bunch of people going out and speculating and buying farms and taking government land and it feels like any bubble that we're used to today when you hear the stories from back then. But you kind of need that to attract the crazy people out there who are going to go move from the East Coast to the middle of nowhere, take the risk, and then let other people kind of come in behind them. I mean, that is the American spirit for sure.
It is.
And that involves a little bit of gambling sometimes.
Yeah. So Packy, what are you, any companies are you looking at, you're excited about, any trends that you think either founders or talent should keep an eye out, or capital allocators?
I'm going to just be a broken record on this one, where I don't know what they are, but I do think that every industry, is potentially up for grabs, like at the high levels, like building, something that in 20, 30 years is sitting atop one of these multi-trillion-dollar industries. And so I think part of it is, where do your skills fit the best to go tackle one of those things? Or are you someone who knows how to organize the kind of business that it'll need to be a large company on top of one of those industries? But I do think that all of those are up for grabs. So pick the problem that you want to work on. I mean, I think generally, I'm also a broken record on this, did a podcast on it, have written about it a bunch, but I think nuclear is ripe right now. And I think one of the big reasons for that is, whether it's data centers, whether it's electrification, but like the customer not necessarily being a utility that has to buy a 1 gigawatt reactor, but opportunities for more direct purchase from end users on whether it be a 1 megawatt reactor like a Radiant, or a 70 megawatt reactor like some others are building. Being able to sell to somebody who just needs cheap, reliable energy, I think is a huge unlock for the industry. And the cost physics on nuclear are great, and the sentiment is turning in the country. And so, I don't know, the ability to kind of manufacture megawatts, I just think is going to be one of the more important things. I've been on a huge oil kick. I read The Prize, which is super long and super good by Daniel Yergin, on kind of the history of oil.
I bought it, by the way. I bought it after you recommended it. Yeah.
Awesome. It'll take some time. It took me a while, but it's worth it. And then I read Saudi Inc. on kind of, Saudis and Saudi Aramco, which is a company I definitely want to write about at some point here, because every time you look at the top company charts, it's like, all the tech companies we're used to, and then this one just sitting there just printing money. Most profitable company of all time. But to take the thing where, like, before you had to be lucky enough to be sitting on top of this natural resource, and now to be able to manufacture that thing and to be able to get really, really good at kind of manufacturing energy is just this like weird, huge civilizational unlock. And I think America should get really, really good at doing that.
Yeah, I do think it's hard for the average person to imagine what happens when energy becomes like trivially cheap and abundant beyond belief. Both on even with existing technologies right now, like AI is going to require a lot of power, so we would be able to power, much more powerful like GPU clusters, all that stuff, training more, bigger models, all that. But even just for the average person, like just the capacity to just do things like for airplanes to go faster, cheaper, with cleaner, like clean energy. You could just hop from San Francisco to New York in a couple of hours, maybe 45 minutes, 60 minutes, whatever. It'd be the changes in civilization, like you said, civilization unlock. It would be mind-bendingly insane. In the best possible way.
Yeah, you can power all of. I mean, like that's another one. And robots are certainly overhyped right now, and we have not made any robotics investments. And I think there will be winners. Might be too early for some of the stuff right now. Who knows what's going to happen? But when labor mostly turns from something that you feed with food to feed with electricity, like that feels like a really big, obviously a big power source. But this crazy thing that if energy is really cheap, robots will certainly come down a cost curve pretty intensely once people start making robots that are useful to people and businesses and all of that. You'll be able to have servants and labor and people to build things for you that pretty much costs what it costs you to plug in, and that won't cost very much. Like, I just think it's very, very hard to imagine. We could be talking something that's 50 years away or 70 years. Like, even if we don't overhype the short term, at some point that becomes a pretty wild world.
Yeah, absolutely. On the writing and kind of content side, newsletter, do you see, for people who are thinking about writing or getting into that game, are there opportunities or gaps that you think are underexplored right now that somebody should be tackling?
Yeah, I think this one, if I were starting today, I think I'd be in real trouble, because going kind of general like I do is I think much tougher to do right now. I got lucky that everybody was stuck at home, and I was stuck at home in the beginning of COVID, and there weren't a billion newsletters or blogs. But I do think the ones that break out are the ones that are like autistically passionate about a particular thing or experienced in a particular thing, and just, go write the piece of their life and then just kind of stay focused on that niche. I think there's not nearly enough kind of niche expert content well written on a bunch of different topics. There's a piece that broke out on kind of why drug development is so expensive. And the guy who wrote it started a company and went on Patrick O'Shaughnessy's podcast because he wrote this like one unbelievable piece on drug development. And I think there's opportunities like that. People are curious about all sorts of industries that they know, frankly, nothing about right now. Like, if I'm researching Earth AI or Cobalt and somebody wrote a great breakdown on how the mining industry works at a very detailed level, like, I would love something like that. And so I think for people who have experience in some of these industries that people are getting excited about, but that people frankly don't know very much about, I think there's a ton of opportunity to kind of just go as niche and detailed as you possibly can, and help people understand that piece of the world.
Awesome. Well, there's your daily dose of optimism for those listening into the to the pod. Cool, man. Well, where can people find you and read you or follow you?
Yeah, so I'm at notboring.co, notboring.co, and then at Packy, Packym on Twitter or X.
Or X. That's right.
What do we call it? What do we call it here?
Yeah. Still Twitter.
It's still Twitter.
Still Twitter.
Yeah,
me too.
Yeah. Yes, that's right. Hey, man, it's great to see you again. Thanks so much for coming on the pod. This was a lot of fun.
This is awesome. Thanks for having me.
Yeah, man.
Yeah, thanks, so.
Thanks for listening to this episode of the New Founding Podcast. New Founding has become a rallying point for founders and investors who are taking serious bets in the face of a stagnant business culture. Our venture fund backs founders building dynamic companies, powered by American ideals and a positive national vision. These are the kinds of founders that embody the optimism and competence of the people who come on this podcast. If you're interested in investing in our fund, check out newfounding.com/venture fund and follow the link to apply.